Is now a good or bad time to buy a home? We're going to look at the answer to that question, look at the data, and you might be surprised. And is the U.S. in trouble? Our credit rating as a nation just got downgraded. People thought we were or could go into a recession. Are we in for like a hard landing? Is the U.S. in trouble? And how could that affect the housing market? We're going to look at that. Here's what we're not going to look at is rates, because rates are about the same. I've covered it week after week after week. And that's not going to change meaningfully. We have CPI coming out on Thursday, which is the measure of inflation. I think that could come in a little hot. We'll see. We have one Fed president now talking about more rate hikes, which I disagree with, but I don't get the vote. And so the Fed is committed to having rates higher for longer. And that means that the market is going to feel very similar like this, like I've said many, many times. And that's probably not going to change until we get further throughout the year. And again, that depends on the data. Now, the big news that's been making the rounds is that the U.S.'s credit rating got downgraded right here. Fitch downgrades the U.S. credit rating from AAA to AA+. I've read a bunch of articles on this and watched a bunch of videos. And basically, there's 9 countries that are basically the Nordic countries: Austria, Denmark, Norway, the Netherlands, and some other countries that really have this rating of AAA. And one last thing that does why we lost the rating, and this is not the first time, look at the interest payments that we pay as a nation. That is extremely high. I mean, so no surprise there. And that is a big reason, some political reasons as well, why Fitch said that they lowered the credit rating in the United States. This is not the first time. What's my thoughts on that? It's very complicated. In fact, I redid this video because I was getting too in the weeds. But I'm going to just sum it up by saying what a guy that I listen to, a guy named Chamath Palihapitiya, hope I'm saying his name right. He's a man is a hedge fund, I think, with like billions of dollars. And one of the things he said, which I know my opinion is 100% true, is you have to look at things relative. Who cares what Fitch says? Countries and places around the world that are looking to store their money, there is not a better place than the United States. The U.S. is the reserve currency for a reason. That's because not only is it the safest place, not only is our country one of the strongest countries when you look at other countries and issues they're having, we also don't have a tyrannical government that will just seize assets of these other countries as far as like, well, I'm not even mentioning other countries, but other countries that will do that. And so in general, as a whole, the United States is pretty strong financially, and it really doesn't matter what Fitch says. There is some things that in the short term could affect bonds and U.S. treasuries and maybe a little bit interest rates, but ultimately I'm going to leave it there because I don't think it's worth stressing, even thinking about or worrying about it. I've seen some negative headlines. Ultimately, in our little world here called being a mortgage person, being a real estate agent, it's not going to have much of an impact. We're probably, if we're going to go through recession, it's kind of what it feels like right now. None of these things are going to have a major impact on the economy. Biggest thing we need to worry about is how long the Fed is going to keep rates higher. For now, that seems like a while. And as rates fall, that's going to shift the market to whatever the new normal will look like. As far as this is a good time or bad time to buy, let's say that we looked at price as being whether it was a good or bad time to buy. In June of 2023, the average median home, or starter home, I should say, not median, was 243, yeah. And then in 2019 was 166.5. So that's about $600 or $700 more a month. When the average person is not making that much more money, their income has not went up to the proportion that real estate has went up and rent has went up. So you could say, well, then that makes it a bad time to buy because homes are and affordability is not good, especially with rates being higher. But my mom used to buy Cokes for a nickel, and if I'm waiting to buy Coke again, I guess I'm just going to have to drink water. And chances are prices are not coming down meaningfully because there's nowhere for inventory to come from. And any debate, any conversation I've ever gotten this, I ask, where's the inventory going to come from? In 2007, it came from short sales and lots of other places. It's just not likely, and no one has a crystal ball for sure. Don't get your financial advice from me. Personally, I'm buying real estate. I bought a single family home. I bought a commercial building. I'm going to be moving my mortgage company there. So I'm definitely active in the real estate market because I think there's lots of opportunity. And you should too, and so should our clients. Now, one of the things that I wrote down that someone gave me that I thought was really interesting is supply and demand rules all markets, right? In 2007, there were 4 million homes for sale, and that was a housing bubble. Fast forward to now, there's really around a million or so total homes on the market in the United States. Population went from 301 million to 335 million. So you have 34 million people trying to buy 3 million less homes. We say, well, interest rates are slowing down the market, right? Higher rates are going to slow down demand. And that is 100% true because people qualify for less. But new households are forming at 2 million houses per year. Where does new inventory actually come from? Where does it get born? From builders. And they're only putting up about 1.4 million homes a year. So that's a deficit. What does that mean? It just means there's not enough housing for all the people that want to buy now, that will want to buy in the future, and the housing formations that are happening now. And when rates fall, that's just going to put more demand on that very limited inventory. So what's likely to happen is we're going to be in a market very similar for a long, long, long time. I don't know where that extra inventory will come from. And housing and rents are likely to stay elevated for the very, very foreseeable future. So all things being considered, where would someone rather put their money? Again, you can't time the real estate market. If you're renting a home, it's going to be paying for your own home, right? When I was buying rent from my landlord, owning with my business, I decided to invest that into my own building that I own. Ultimately, that's the game with real estate. Appreciation, all those things are a great part of it, but that's actually not the reason to buy. The easiest reason to justify buying is allocating the funds you're already spending into something that's a long-term investment. Anyways, that's my opinion. That's what the data shows. Last thing I'll say, I had someone ask me, Rayce, why should we work with you? There's lots of lenders out there. I think any good lender should be able to answer this. It's not programs. It's not rates. It's not fees. Yeah, we're good at all that stuff, but someone's always got a lower rate, lower fees advertising the internet. It's that we spend a tremendous amount of time getting people pre-approved. That's what it takes right now. You have to kiss a lot more frogs, spend a lot more time, get a lot more creative to get people that can buy now and put people in the hopper that can buy down the road, because we're good at tracking them, building them a mortgage plan, and setting them up for success in the future. Anyways, my name is Rayce Robinson, your favorite Florida mortgage broker. As more information becomes available that moves the data, as it moves the market, as always, I'll cover it here. Have a great day, great week. Let me know what I can do to help. I'll talk to you soon. Bye-bye.